Hello, everyone. This is Dr. Duru from Ahan Analytics with the market breadth. This week was an important week in several ways. The biggest one to me is that there were no major headlines this week, finally, that caused major disruptions in the stock market. We essentially had a continuation of the theme of release from the last week. Basically, that policymakers are finally starting to pivot the messaging about the economic chaos that's been triggered by different policies and tariffs and so on. So the result is that this week was calmer. It was had a very strong upward bias, and it presented great follow through to the previous oversold period. Okay, so as I was saying, no big headlines this week. This is the snapshot of news as I sit here today and right now. There are a few headlines that I'm going to be interested in looking at. They're little tidbits here. Inflation expectations at the highest level. That shouldn't be since 1981. That shouldn't be a surprise, given how inflation expectations have soared over the last 2 months. This one's really intriguing that Yahoo might want to try to buy Chrome if Google has to sell it. That's quite a turn of events there. And we're in the middle of earnings week, and there's going to be lots of big headlines like this one. So let's just go ahead, get to the charts, see what happened. I'm starting with market breadth, of course. Market breadth, as I said, today was a great follow through week. We had a big jump on a Wednesday. That was the biggest move, but on Tuesday was the day when the oversold period ended. So now we are now 3 days into this post oversold period. Things are looking good. There's a little bit of resistance here, which was the last peak. If we get above that peak, now suddenly we end this downtrend of lower lows and lower highs. And that would suggest, unlike what I've been expecting, that this low may actually be the low for quite some time instead of just a sustainable low. But I don't want to get ahead of jump the gun and get ahead of things. Let's just continue to be cautious and assume that this is a sustainable low and not the low or the bottom. Okay, so that was the percentage of stocks trading above their 50-day moving averages. Let's take a look at the stocks trading above their 200-day moving averages, which I call AT200. And you could see it pretty much stalled out these last 3 days after the big breakout out of oversold territory. So, this is encouraging. It's not as encouraging as AT50, but it's doing good. It filled up this gap, which represented, I believe, the beginning. Yeah, this was the beginning of all the madness with the tariff stuff this month. And longer term health is starting to heal a little bit, but the downtrend is still very much in effect. And it's going to be in effect for quite some time. It's going to take a lot of more buying power to get the long-term market breadth back into out of broken status. Okay, let me change the scale to logarithmic, and let's take a look at the indices. I mentioned that there were some important developments this week. One of the important developments is finally the S&P 500, for instance, got above the high of the first big tariff relief, which was on April 9th when we got news of a pause on tariffs. Now, let's keep in mind that that pause is exactly what it is. It's a pause for 90 days. So in 90 days, we could be facing all of this same tariff tantrums, tariff trauma all over again if negotiations from here until then do not pan out, in an ideal fashion. But anyway, we're only concerned about right now, and right now the index looks really good, finally getting above this level. And the ironic thing is that we could end this month looking back and saying that was much ado about nothing because look at this. The S&P 500 closed right here at the end of March, and that close is right under 50-day moving average resistance. So if current momentum holds and the way that the magic of technicals work out, I'm expecting this. We will basically close April flat. We will be right at 50-day moving average resistance, and we will then be wondering, can the buyers continue the momentum? Is enough buying power left to push through this resistance and then really do the big one, which is getting above the 200-day moving average again? That's not my baseline case, but I'm willing to keep an open mind and just watch how the technicals unfold. Okay. Now, the NASDAQ also had some important developments. So it too finally got above that important spot here on April 9th, which was the close above after the tariff pause. Now, where it is back at where the previous low was in March, or one of the closing lows in March. It's also right below, it's about to challenge its downtrending 50-day moving average resistance, which is this red line. And let's see, where did it close March? It closed March right here. So the NASDAQ already is even. In fact, the NASDAQ, believe it or not, is positive very slightly for the month. I mean, that's just mind-boggling given where we've been, right? We've been moving in huge chunks because of all the tariff noise and tariff drama. And now we're looking at this, and the NASDAQ is essentially up slightly for the month. That's just mind-boggling given where we've been. Small caps, still, oh, wait, here's an important development for the small caps. This is going to challenge me for next week because now I need to care about small caps again. Let's extend this line and look at that. Small caps closed right at the bear market, the conventional bear market line, 2 days in a row. So, per what I've been talking about, is I'm only interested in IWM if it breaks above or below this trading range. And it looks like it might be above. In fact, if I had been paying attention to IWM, I might have taken a risk and bought some call options today, but I did not. So what I risk, of course, is missing a big Monday where we gap up and IWM makes a bum rush right to its 50-day moving average resistance. But that's okay. I mean, I have shares in IWM, so I'm always benefiting when IWM does good things anyway. I'll just miss the short-term trade. Okay, now let's take a look at the VIX. The VIX finally is making a beeline downwards. So you see now it's at 24.8. And I put some additional markers here. In fact, let's just zoom in because this is a very important. Look at this. It's only obvious when you're looking back after time, but look at this almost systematic downtrend now in volatility. Essentially, think of this as the market is finally digesting all the tariff drama. It's actually putting the tariff drama behind it. I would, given how I've seen stocks react to earnings news for individual companies that had, whether it was good or bad news about tariffs, the most of the reactions I've seen have been quite tame and sometimes positive. So I think the market is now finally starting to just ignore. This is just my guess. It's starting to ignore the tariff headlines, put it behind them, and just assume that what's coming after the 90-day pause ends or somewhere before that, assume the good outcome, right? And so now look forward to, who knows, rate cuts from the Fed because all is well again. So this orderly downtrend in the VIX is pretty important. It's now at its own 50-day moving average. So of course, next week we could get some bounces off here before this downtrend resumes. So, as a history lesson, a recent history lesson, so take a look at what happened, how the VIX is correlated to important moments for the S&P 500. So, the highest close for the VIX during this cycle was right where the S&P 500 had its closing low on April 8th. Okay. This wasn't the highest intraday point, but that was the highest close. Another important point to note, this is the day when U.S. Treasury Secretary Bessent predicted. I mean, you could call it a guess. He kind of made a soft comment here, but he claimed that the VIX probably had peaked. And you can see, sure enough, the VIX has not. It closed low that day. It churned a little bit, but now it's resumed the downward trend. So this resumption of the downtrend, almost essentially think of it as confirming Bessent's claims. And of course, Bessent is an insider, a policymaker insider. So, we have to take this correlation pretty seriously, given it's worked out. All right, so that's the VIX. Now, I have some individual charts. There's no specific theme, but I did want to go through them really quickly. First of all, CoreWeave, which I consider because it's a AI IPO that's recent, it's a representation of speculative fever or interest. And you can see here that CoreWeave is still in cool off mode from the overheated 2 days that it had earlier this month after its IPO. Let's move on to American Express. This is a stock that I own, and let me pull back out. You can see that American Express, like many stocks that you're going to see in the stock market, is close to challenging very important resistance levels with the 50-day moving average and the 200-day moving average. Unlike some stocks, American Express still has a pretty much uptrending 200-day moving average. So if it breaks out above that, it should be the all clear sign for American Express, ticker symbol AXP. Accenture was a stock that I talked about because I liked its business in generative AI projects. That worked out for a hot day or two after this bullish engulfing pattern. And then even Accenture couldn't resist the selling from the tariff news. Now, tariff noise. Now, notice how Accenture is still below its close from the April 9th date. As I showed in one video, of the importance of pivoting on this date. When you're looking at stock charts, or at least when I'm looking at stock charts, I'm going to be comparing to this high. For stocks that haven't climbed above this high, I consider them still in a danger zone. For the ones that have conquered this high and traded higher, I think of them as being the most promising set of short-term trades. And also, not in Accenture's favor is being held up at this steep 20-day moving average downtrend over the last three trading days. So I'm a little nervous about my holding there from a technical standpoint. Intuitive Surgical, ticker symbol ISRG, is one a stock that I bought. I think it was back here. It was either here or here where I was playing 200-day moving average support. Even Intuitive Surgical got clobbered by the tariff drama. But what was encouraging to me is that on the big tariff pause day, it surged right through 200-day moving average support, resistance. Now, even though it pulled back, it survived its earnings report, and now it's clinging right there. Look at that, at converging resistance at the 200-day moving average and the 50-day moving average. So it's right on the cusp of breaking back out and then hopefully eventually resuming this uptrend. So this is a very positive development for Intuitive Surgical. Google had a lot of earnings headlines. I can't go through them now, but I am a holder and I'm encouraged despite all of the Department of Justice antitrust case against them. Google is one of those stocks that is above the April 8th closing high. April 9th closing high. So it's in good standing. It's above the 20-day moving average downtrend. And for a brief moment today, it got above its 50-day moving average downtrend. And I think it's going to be stuck in a trading range for a while underneath the 200-day moving average. But of course, that remains to be seen. I just think of this spot right here as being stiff resistance. Okay, Twilio. I've written a lot about Twilio. I finally got into Twilio, back into Twilio this week when it broke out above its 200-day moving average. So that so far is working out well. I'm of course watching very closely what's going to happen at downtrending 50-day moving average resistance. If it doesn't act well, I'll just take the profit short term. But of course, I'm hoping for a breakout and being able to continue to hold that. And also, I like Twilio's stock price action during all the tariff drama. It didn't stray too far away from the 200-day moving average and even pivoted around there for a little bit. So that's also positive action there. All right, let's take a look at some important ETFs. So the Spider Select Sector Fund for Industrial XLI, it is above the critical point. I'm just going to call it the critical point now instead of saying the the April 9th close. It is also, again, like I said, a lot of stocks and ETFs and indices are going to have the same pattern, which they've broken out above the 20-day moving average downtrend, but still have to fight overhead resistance from the 50-day and the 200-day moving averages. But overall, this is positive and constructive trading action. The next one is XLB, which is for materials. It's the material select sectors, SPDR or SPIDER. And it too is above the critical point. It's above the downtrending 20-day moving average. And guess what? It now needs to contend with the 50-day moving average line. One thing I forgot to mention is that there are other important points besides just is it going to close flat for the month and totally reverse all tariff related losses. There's also, for some stocks and ETFs, there's this low that was created at the beginning of the year. And you can see right now, XLB is trading right at that point as resistance. Okay. All right. Next up, one of my favorite AI plays, Vertiv Holdings. Very impressive week. It gapped up post earnings 8.4%, 8.5%. I think it was up as much as 12%. It was faded, almost like clockwork from 50-day moving average resistance, but the buyers stepped right back in on Thursday and Friday, the all important 50-day moving average breakout. So this is great news. It's bittersweet because I did sell a call against half of my position that will, I'll have stock taken away from me here. I was just trying to take advantage of the earnings premium. Of course, I just didn't anticipate that the trading action would reverse so positively. But now with this breakout, Vertiv looks ready to run all the way to 200-day moving average resistance. I also sold a call against the other half of my position. So let's see if I'm able to keep that. But I'm fine if it gets called away. I sold a 95 call expiring in June. I probably should have sold one expiring in May. But if it gets back above the 200-day moving average, I just revert to the way I was looking at considering Vertiv before, which is as a positive, very strong AI related stock to buy on the dips. Okay, we're almost halfway there. Goldman Sachs, look at that. It's traded right below 200-day moving average resistance. I got out of the Goldman Sachs was one of my oversold period stocks. I've already taken profits on it. If it breaks out above the 200-day moving average and the 50-day moving average, then it's back into bullish territory and ready for more short-term trading. Okay, bad news for Robert Half, which is a staffing company. It plunged. Well, actually, it did a lot worse at the open, but it only lost 3%, 3.1% after earnings on Thursday. The sellers stepped back in, but the most important point is that incredibly, Robert Half hasn't been this low since May of 2020. So it's making a beeline, it seems, for post-pandemic lows, which seems very surprising to me. I didn't have time to check out the earning news for this, but this just seems overdone. But the technicals are definitely bearish. So count Robert Half as one of the stocks not enjoying the oversold bounce. And this, something like Robert Half is another reason why I am always tentative to just try out swing trades from an oversold bounce on stocks that have yet to report earnings. This is definitely one of those warning cases. Okay, Impinj. This was a big mover post earnings. It gained 16.5%, 50-day moving average breakout. Today it confirmed it. So, Impinj, ticker symbol PI, is in bullish territory. So I've got this on my list for next week. I would love to buy it just a little bit lower on a test of 50-day moving average resistance, but let's see what happens. But Impinj is back on the buy list. Starbucks, I believe, reports earnings next week. Yeah, I think it's next week. I was surprised to see that it's basically at one point closed this gap, which was when Brian Nickel came in from abandoned Chipotle and came to save Starbucks. So this gap pretty much got filled during the lows of the tariff drama. And Starbucks looks like it's out of gas. I mean, it's not even challenged its downtrending 20-day moving average. So I'm going to be watching it for earnings. This was one I was hoping to play for an oversold bounce, but it doesn't, it just looks lackluster. It doesn't look interesting to me at this point here. I haven't looked at Microsoft in a very long time. It's sort of like that quiet big cap tech stock. And it made a bullish 50-day moving average breakout today. So it is on my buy list, but earnings are coming up. So I will, if it's coming up next week, I won't be buying it ahead of earnings, of course. But also note that it just barely got above the critical point, the above there. So it's in bullish territory all around. And it would be a play to the 200-day moving average resistance. Okay, here's another stock in the transportation area. This is a warning. Again, I didn't have time to look at the specific earnings news, but this transportation company seems like it'd be a very bad sign for the economy. It plunged 31% today post earnings. That took it back to uh, basically it's almost a 2.5 year low. So I don't have perspective on whether this is extreme or not for this company, but it just did catch my eye given it was one of the biggest movers on the day. Okay, let's take a look at Albemarle, ALB. This one also is still in bearish territory because it's still below the 20-day moving average resistance. It's hasn't even gotten above its critical point. I'm a holder in this, so I have a stake in it this stock struggles. So I'm looking for it to break out and join the rest of the crew out of oversold, joining the rest of the crew in an oversold bounce. Now, notice as the oversold bounce unfolds, stocks like Albemarle have a long way to go before they get above their 50-day moving average. This means that by the time my favorite technical indicator, AT50, the percentage of stocks trading above the 50-day moving averages, gets towards oversold territory, I'm going to be very nervous that overbought territory at 70% will be a bearish short-term signal because by that point, it has taken a lot of buying power to get those last stocks up to their 50-day moving average resistance. Again, I'm not trying to think too far ahead, but that's something to keep an eye on. Okay, AMKR is a semiconductor stock I talked about before. Um, this was back here. I was really hopeful that this 200-day moving average support would hold. It did not. I decided wrongly, probably, to just hold it for the quote unquote long term, and the short term crushed me. I almost bought some more, but with earnings coming up, I'm going to just wait to see. I'm hoping that it's a positive response. If it's a positive response, I will definitely add to my position. If it's a negative response, I'm going to have to think about just cutting this one loose. As a reminder, I've written about this in times of economic turmoil here. It's all fine and good to look to buy the dip and so on, but just some of the stocks that are the weakest in this kind of in this kind of time may not make it out of to the other side, to the greener pastures. And even if they do make it, they may make it in a much weakened condition. So I've been trying to cull those kind of stocks from my list. I think I'm down to a very strong cohort now, but AMKR is right on the edge. AMKR Technology, ticker symbol AMKR. And then one last one, MLM, which is a materials company, Martin Marietta Materials. It is above the critical point. It made a 50-day moving average breakout today. I have enough shares in this one, but I did want to point out that it is now, I consider one of those bullish stocks that has the 200-day moving average resistance to test. Okay, that's enough individual stocks. There's plenty more where that came from, of course. Remember, it's earnings season. So stay alert for the stocks that are in your portfolio. If you're doing short-term trading, I would avoid stocks that are reporting earnings and would wait for those reactions. So remember, this video and this content is for educational purposes. If you want more detail on this kind of content, you can go to my blog at drduru.com/122, all letters. Please like and share this content so that other people can find it and the algorithm can bless me, in so to speak, and follow this channel, and you will get alerted when I create new content. I also create shorts that provide a much tighter TLDR type summary of the action of the last week. All right, thanks for checking this out, and I will see you the next time. And enjoy this rest and respite from all the tariff drama. Let's take a deep breath and just appreciate that we survived an historic oversold period. It lasted for 12 days. It's only the eighth, only seven other oversold periods that lasted as long or longer. Very, very torturous time that April brought to us with tariff drama. All right, take it easy and be